Hey, beautiful people. Welcome back to Invested. Thanks for checking out our channel. Hey, I'm taking a lot of questions. I'm going to take a few questions here today. It's the title goes, Timing of Walgreens Closing, Looking at the Midwest Strip Center. I'm looking at underwriting and buying a local strip center. There are 6 local tenants plus a Walgreens. The seller has told us they haven't heard anything from Walgreens, which doesn't surprise me. Is it likely that Walgreens would announce which location are closing in the next 2 to 6 months? Is there a good way to research whether any given location is likely to close? For what it's worth, this location seems relatively busy throughout the week. Great question. Good for you. You were looking at investing. So I don't know how old you are or how much this is worth, but good for doing that. So this is common things, right? Where Rite Aid closing, Family Dollar, which was about to go BK, and I believe Dollar Tree bought them out. But they're still closing a lot of Family Dollar as well too. So the question is, how do I know which location is closing? It could be beneficial or it could be negative if you're looking at the deal, right? Because as you all know here watching this channel, CRE is traded based on value, how much revenue you can generate off the 4 walls and the roof. That's going to really dictate the value of that investment. So I think this person looking at it with their 6 local tenants, to me, what that means is the local players, local pizza places, XYZ, that doesn't have an investment grade, such as like Starbucks and stuff like that. But the Walgreens, it's an investment grade. So that Walgreens being there, if that's part of the investment, that's going to elevate the value and the cap rate. And when I say compressed cap rate means it's lower cap rate. So it's from 6%, right? If that's 4%, that's compressed cap rate. Decompressed meaning that from 6%, 8%, that's decompressed. So if you have local tenants, the value of the property, even though they have a good NOI, is going to get decompressed cap rate compared to the market is because you don't have that excellent credit from a tenant-based mix. But Walgreens coming in or being in that mix really compresses overall cap rate for the benefit. So it's good for the seller, right? And also the buyers are looking at that credit in determining the price. So how do you find if they're closing? Honestly, it's going to be very difficult. And I'll tell you why. Because even Walgreens, they may have anticipated some locations closing, and they're right now looking through all the performance, location, FTE staffing, the rents, occupancy costs, margins, things of that nature. Or do they own the property or they rent from the property? So usually when that determination is made and it's spread out throughout the country, and Walgreens is in the business of pharmaceuticals and pharmacy and knickknacks, right? They're not a real estate company. So even though they have a real estate department, it's going to be a great amount of work that has to be done to communicate and do all these different things. So more likely than not, they're going to engage a national broker that they have relationship with. Could be CBRE, JLL, Cushway, Colliers, all the big names that you guys know of, Newmark. But also, if it's spread out, they might engage regional or local brokerage. That's going to do a better job for them. So then once that determination is made, usually that broker will reach out to the landlord and say, hey, I represent Walgreens. As you already know, this site is picked as one of the locations that's going to go dark, right? So the going dark means is that they're going to not occupy and utilize the space. That doesn't mean they're not going to pay the existing rent. So if there's 3 more years remaining, Walgreens is going to pay that rent, but they're not going to operate. So that broker or advisor is going to reach out to the landlord, and the first initial thing is going to say, hey, can we talk about our early termination or let us out early? We'll give you 20% of the remaining value of the lease today. So some landlord may take that, but most landlords are going to say, well, no, if you owe me $100,000 over the course of 2-3 years, I'm not going to take $20,000. So that's how the initial engagement is going to start with the landlord of the building and Walgreens as a tenant. And intermediary is going to be a broker. So that's the initial conversation that's going to start. Then the landlord is going to know that the Walgreens is going to go dark, and they may let you know. And other thing is that if you have good relationship with brokerage community and you're very active, and you're going to be in the know regardless, because these people are going to reach out to you first and say, hey, we have a standalone Walgreens. They're going to go dark. There's 5 years remaining. Do you want to buy from us, right? Or to redevelop? Or can we work something out with you guys? Because you guys are very very active in the market, and this is the profile of investment and asset you guys look for. So those individual groups or individual developer operators are going to get the first dibs. So for you trying to go into this as a new player, you may do well, but the information is always key. Like any business, right? You can be the smartest person in the room, but it's a relationship game, and real estate is very relationship driven as well too. So my advice to you is keep in touch with the landlord to see if they hear anything back. They're probably not going to hear anything back until the full determination is made through the corporation of Walgreens, and most likely a broker will be reaching out to renegotiate or early term the current lease with Walgreens. At that point, then depending on your strategy, you can walk away because if you needed that Walgreens to make the deal work, or you wanted the Walgreens to leave so you could repurpose that because you have another tenant in tow that might take that space for longer. So then you can negotiate with the landlord at a reduced price and have a tenant in tow, close it, terminate the Walgreens, take lump sum of money from them, let's say 20, 30, 40% of the lease value, and they walk away, and you could bring in a brand new tenant that you have in your back pocket. So that's usually some of the strategies a lot of these developers or, the retail players will look at. I hope this information was helpful. And if there's anything else you want, leave comments. We'll get back with you. If you found this content helpful, please like, subscribe, and follow. Thank you very much.